So you've got money in your savings account or you've got money in your SAS pension wrapper. You're thinking about investing in a property project that's being managed and run by someone else. Here's one question you definitely need to ask them. Hi, my name is Edward. I have been a chartered surveyor for 19 years, and throughout my career I have advised investors in real estate that have ranged from huge corporates with international investment interests right the way through to individual investors, helping them with their direct investment into single properties up and down the UK. I've also been an associate lecturer at Oxford Brookes University teaching real estate investment finance and commercial property valuation. And most recently, I was head of investment finance for a property division of a FTSE 100 listed company based in the City of London. So hopefully, I've got a good blend of theoretical and practical experience that I can share with you to help your property investment journey go a lot more smoothly and be a lot more profitable. What we're looking at here is a very common situation. It is highly likely that you, being approached and asked for money to invest in a real estate project, will be presented with a suite of documents that showcase the glamorous side of that property investment. And generally everything you hear about that property investment from the people asking you for money will always be couched in positive terms. They're not trying to deceive you, at least I sincerely hope not. It's just anyone asking for money for their property project knows that they need to sell the positives of it. So it's absolutely crucial then that you as an investor understand what due diligence you should undertake and can undertake in order to uncover any potential problems with that investment opportunity. So we're going to focus in this video, like I say, on just one question and one aspect. So you have that suite of information, and in that suite of information, you should get some sort of financial projection. That financial projection will set out what the project manager, probably the person asking you for money, expects in terms of financial returns from that particular property project. Now, it is highly likely, because we're dealing here with private investment in real estate or private investment in property, that the project you're looking at will involve some degree of property renovation or refurbishment. All right, so far so good. Now, it is extremely common for an investor in property to be presented with a figure called the net present value, or NPV. The net present value figure that typically sits at the bottom of a big old cash flow tends to be quite an attractive number. It is, the net present value is the amount that we would reasonably expect to pay today for the opportunity to buy this whole investment. And so it's normally a very, very big figure. Now, typically with real estate, we deal with hundreds of thousands, but normally millions of pounds of investment or value, property value. So you can imagine then that if your NPV is £1 million, that you're being asked to invest £100,000, that you might naturally derive some comfort and say, well, if this opportunity is worth £1 million today, and I'm only being asked to invest 10% of that, £100,000, my risk profile is quite low. I stand a very good chance of getting my money back. Well, that says maybe. What you need to do is make sure that you ask for the discount rate. A net present value cannot ever be calculated without a discount rate. So you must ask for the discount rate if it isn't given. And here's a very good example of why. In a meeting recently, I was asked, when I was representing the company I was working for, to invest in a scheme being proposed by the company sat on the other side of the table from me. Their scheme involved a degree of property renovation. Now, all property investment comes with inherent risk. I'm not going to go into the different risks now, but all property investment comes with a degree of inherent risk. Property renovation and property development are right up there in terms of having a higher risk profile. No matter what anyone tells you, investment in renovation and investment in development always carry a higher risk, but then equally they should come with a higher return. Right, let's get back on the case in point. So there I am in this meeting, and I've got that suite of information. I'm looking at the financial projections, and sure enough, there's a cash flow, and sure enough, at the bottom of the cash flow is a net present value figure. Beautiful big figure, really nice. No discount rate provided. So I asked for the discount rate, and I was told by the person sat opposite me that the discount rate was a little less than 4%. Now, the Bank of England base rate at the moment is 4.5%. So effectively, what that organisation sat opposite me was telling me was that they believed their project, which included property renovation activity over a number of years, was deemed to be at less risk than just giving the money to the Bank of England. And we all know that that's unreasonable, unlikely, impossible, just totally bunkum. And the problem there is my confidence in them as an organisation delivering a scheme dropped through the floor. They needed to go away and rerun their numbers, and actually their model then didn't work. But so easily, we could have had a different run of events. Because if we'd gone just on net present value alone, we would have seen a lovely cushy number, but actually we wouldn't have seen that it was based on an unreasonable reflection of risk in terms of the required rate of return of that project. I'm running a beta program advising private investors in this exact situation. So if you find yourself in a situation where you have been asked to lend money directly into some form of property scheme by someone you know or perhaps don't know, and you're not really sure of the process you need to follow to run due diligence on the individuals involved, the companies involved, and the scheme itself, then this short program that I'm offering is absolutely perfect for you. And it is limited only to a small number of people because I want to make sure that I can speak with everyone, work with everyone on an intimate basis, and make sure that actually everything you're being asked to invest in is fully understood. Working on this program with me, what you'll come out with is a very quick response to that typical refrain, I don't want to learn, I just want to do it. And you will be able, from there on in, having completed this program, to be able to quickly assess and appraise the veracity and the financial security of any real estate investment project. So if you're interested in that, please do register your interest. There is a link in the description of this video below, or email me. My email is edward@edwardab.com if you're interested in joining me. That course will be kicking off in March 2025, and I'd be delighted to see you on it. In the meantime, thank you for watching.